Level 1, the beginner in a small apartment. You're 19 years old, in a simple room with a narrow bed, an old laptop, and a spreadsheet open on your phone. You just heard about real estate investment trusts from a random video and barely understood anything. Monthly dividends, shares, index funds. It all feels too far from your reality of unpaid bills and barely making it to the end of the month. You buy your first REIT share, something almost symbolic, cheaper than a pizza. The chart moves up and down, and you don't even know if that's good or bad. You keep checking it every day like it's supposed to change your life immediately. It doesn't. Not yet. But something has stuck in your mind. What if this is a path? That doubt is the first asset you actually acquire. Level 2, the curious viewer of videos and forums. Now you're 21, spending hours on YouTube watching REIT analysis, trying to understand words that once felt like another language. Your phone is always full of tabs, recommended portfolios, forums, reports. You're still investing very little and mostly making mistakes, buying based on pretty names or high-yield promises. This is where you realize something. The market doesn't reward speed. One month you get a small dividend and feel excitement. The next you see a drop and think about quitting. But you keep going, even without fully understanding the game. For the first time, you're not just buying shares, you're buying information. Level 3, the follower of ready-made portfolios. At 23, you already have a few REITs, but you still depend on other people's recommendations. Your screen is now filled with more organized spreadsheets, yield charts, and a strange feeling of fake progress. You think you're investing, but you're still copying. The mistake here is not losing money, it's not knowing why. You start to realize some funds pay well but destroy long-term value. Others look weak but are consistent. And that contradiction starts to bother you. This is the level where you feel the first shock. Following is not the same as understanding. Level 4, the disciplined student. At 25, you finally read earnings reports without skipping sections. Your computer now has tabs about vacancy rates, management quality, physical assets, contracts, and distribution history. You start to understand that REITs are not just monthly income, but structure, real assets behind numbers. You make fewer mistakes, but each one hurts more because now you know you should have avoided it. You build your first simple strategy: diversification, sector balance, less emotion. This is where you realize consistency begins to replace excitement. And it changes how you look at every single purchase. Level 5, the method-driven investor. At 27, you no longer buy anything impulsively. Every fund goes through criteria: management quality, income stability, historical dividends. You begin to understand real estate cycles and how interest rates quietly affect everything. Your portfolio isn't big yet, but it's coherent. People around you start asking for your opinion, even though you don't feel ready. What nobody tells you in the beginning is that knowledge brings responsibility before it brings results. And that makes you more careful than confident. Level 6, the portfolio builder. At 30, your REITs already generate noticeable monthly income. It's not freedom yet, but it's predictability. You feel the compounding effect working slowly. You adjust positions, sell funds that no longer fit your strategy, and enter new ones based on thesis, not hype. Now you understand the game is not about being right all the time, but about being wrong less and correcting faster. And that puts you in a different mindset. For the first time, you're not reacting to the market, you're interpreting it. Level 7, the respected investor. At 34, your portfolio is now watched by others. You're part of more technical communities, comfortably discussing inflation, interest rates, and logistics real estate. invitations start appearing. Private groups, collaborative analysis, deeper discussions. But alongside that comes invisible pressure. Every decision feels heavier. One wrong move isn't just a loss, it's reputation. This is where you understand that being right long-term matters more than looking smart short-term. Level 8, the independent specialist. At 38, you don't follow anyone anymore. You create your own analysis, interpret data alone, and see patterns most people miss. Your REIT income is already significant, but it doesn't relax you. It increases responsibility. You start thinking like a manager, not just an investor. You allocate capital as if you're handling something bigger than yourself. And that changes everything. Because now every decision affects not just numbers, but structure, time, and stability for others who rely on your judgment. Level 9, the legacy. At 45, you look back at that simple spreadsheet from years ago, that first small symbolic purchase. It feels like another life. Your income now comes from dozens of REITs, but what truly changed wasn't the money. It was the way you make decisions. You built method, discipline, and long-term vision. Younger people now come to you starting exactly where you once started. Confused, anxious, trying to figure out the first step. And you realize something quiet. Nobody skips levels. Every stage still has to be lived. And when you close that memory, you understand it all started with a single share bought without really knowing what you were doing. The same point where someone, somewhere right now, is just beginning their own journey without knowing what comes next. And maybe that's exactly how the game works. Not as a jump, but as an invisible construction that only makes sense when you've already climbed too far to go back to the start.